Hi, I'm Michael Nurok, and I want to go over an example for a trend trade as an aggressive buy. Now, the first thing that we look at to determine whether it is an aggressive trade or not is the overall trend direction, which in this case is a bi-directional signal, no more than 3 pointing up, no more than 3 arrows pointing down. So this is the one that I want to look at. It's a trend trade buy for an aggressive trade. So what I'm going to do is I'm just going to bring these markers here, a vertical marker and a horizontal line right here. And we can see when the arrow is displayed, it's the bar prior to the arrow bar displayed that was the actual bar that resulted in the signal. The reason why it's displayed on this bar is because we have to wait until the end of the bar, or the close of the bar, before it occurs, but it is taken on the close of the bar detail. So let's have a look at it. We've got an aggressive trade in place with no more than 3 arrows pointing up. We've got the trend follower that's just turned from red to green. We've got the price equal to or above the fast moving average. In this case, it is above, but it's okay if it's equal to, no lower than where the yellow moving average is. We've got the crossover of the fast moving average or the yellow moving average over the slow moving average. We've got the RSI at 50 or above. We've got the MACD above the zero line. It doesn't need to be green. It is in this case. It doesn't need to be above the signal line, which it also is in this case, but as long as it's above. And we've got the white stochastic above the blue stochastic. So they're all the rules in place. Now, what we do is we position our stop just below the moving average, so around 30, 35 pips would be adequate, but I always like to give it a little bit more room, so at least say 40 pips in this case. So 40 pips would place our stop at this point here, and we always want to make a multiple ratio of our stop. So if our stop's 40 pips, we want to make at least 40 pips in profit, but preferably 2 or 3 times or more the value of the stop. So at 40 pips for the stop, 2 times that would be 80 pips, 3 times 120 pips, and so on. So let's have a look. 40 pips would be right here. That is where we could either take a hard target or lock in some profits for that first target being reached. 80 pips would be here, and that would be 2 times, or a ratio of 2 to 1 reward to stop. 120 pips would be here, okay, and 160 pips would be here. So that gives us a 4 to 1 ratio of reward to stop, or a 1 to 4 ratio stop to reward. It depends on how you term it. But 160 pips, this trade in fact went a little bit higher than that, 181, 183, 184, thereabouts. But easy, 4 times its stop value, which gave it a reward multiple of 4. And there you go. That's all there is to it. So we have, of course, cheat sheets in Module 5, a bunch of live trades, and of course, I'm happy to have a look at any trades you wish to upload into the forum, and finally welcome you to participate in the chat room and also the weekly webinars, because obviously the more experience you get, the better you're going to become as a profiteer trader. So that concludes this lesson on an aggressive trend buy example. Oh, I almost forgot. This is on the 4-hour time frame. Should have mentioned that at the beginning. So it works exactly the same on every time frame. This is the 4-hour time frame example for a trend buy as an aggressive buy. Till next time, good trading, live well, and I'll see you soon. Hi, I'm Michael Nurok, and This is a trend trade example, a sell trend trade as an aggressive trend type on the 4-hour time frame. So first rule we need to have for an aggressive trend trade, it's an overall trend direction of a blue bidirectional arrow. No more than 3 arrows are pointing down. In this case, we're looking at a sell. This is the trend trade that I'm looking at. And let's just place our markers here. Bar before the arrows displayed. Okay, and you can see right here is where it was closed. And let's go through this one by one. Now, just before I do that, you can see a trend trade occurred followed by a swing trade, and they didn't go so well. It went against them, not by a lot, just a few pips. But I thought I'd leave that in because trading is not always clean cut. It can be a messy game, but it's about persistence. But anyway, I'll leave that for a psychology lesson and how to deal with trading. But getting back to the trade example, you can see that first of all we have a bidirectional arrow, so it's an aggressive trend type. Trend follower has turned to red. The fast moving average is below the slow moving average. The price is equal to or below, in this case quite a bit below, the fast moving average. The RSI must be 50 or below. It's below in this case. The MACD must be below the zero line. Doesn't need to be red, and it certainly doesn't need to be below the signal line for an aggressive trend trade, but in this case it fulfills the criteria of being below. And the white stochastic line must be below the blue stochastic line. So all of those rules are in place. And as far as our stop, we place it just above the slow moving average, the gray moving average. So 60 pips, I would tend to put it a little higher, say 70 pips. Now, this is on a 4-hour trend, a 4-hour time frame. So 20, 30 pips, you can sometimes get in on a 4-hour trend trade and risk very little and do well. But with trades that have quite a bit of momentum in them, you can expect bigger stop loss sizes being required. And therefore, I would suggest reducing your lot sizes to accommodate for the stop loss. So 70 pips is quite reasonable for a 4-hour trend trade, and we'll be going over that in more depth in other lessons. But if we kept the stop at 70 pips, just about here, you can see this particular example was pretty good. It certainly didn't go against it more than a couple of pips. First target here, 70 pips, would give us a 1-to-1 reward to risk ratio. 140 pips here gives us a 2-to-1 reward to risk ratio. 210 pips gives us a 3-to-1 reward to risk ratio. And this trade actually made it as far as around 260 pips. So just shy of a 4-to-1 reward to risk ratio. And that concludes this example of a trend trade sell as an aggressive trade type on the 4-hour time frame. Till next time, good trading, live well, and I'll see you soon. Hi, I'm Michael Nurok, and this is a swing within a trend example for an aggressive trade. We're on the 4-hour time frame. It's just going over the rules. We've got a bidirectional signal here for our overall trend direction, meaning there's no more than 3 arrows pointing in the direction we want to trade, in this case up. The trend follower has just changed from red to green. Well, it actually doesn't need to have just changed, but as long as it's green, the yellow moving average must be above the gray moving average, so fast over the slow. And this is 2 swings here, so I'll just put my markers down as always for the bar prior to the arrow being displayed because it's based on the close of the candle. Okay, so I'll just do this one first, and you can see here price is just above, as long as it's equal to or above the fast moving average. We've got the RSI 50 or above, and we've got at least 2 consecutive red histogram bars on the MACD, followed by a green histogram bar that's above the zero line, and that's all we need to have in place for the rule to be validated. Now we'll just place a stop, say just below the slow moving average, say 25, make it say 30, give it a little bit more room, and you can see here target 1, say on a 1-to-1 reward to risk ratio would be here. Target 2 would be here, giving us 60 pips, 2-to-1 reward to risk ratio. Target 3 here, 90 pips. Target 4, okay, 120 pips here. Target, whoa, so 150 pips. That would give us a 5-to-1 reward to risk ratio, and see how high we can go on this, 180 pips. So that's a 6-to-1 reward to risk ratio. So of course we can repeat that here. Let's just move this along. So right over here. Now we've got at least 2 consecutive red histogram bars followed by a green histogram bar above the zero line. That's all that needs to take place. Of course, the entry point would be here. And again, it was probably not 6-to-1, but very, very close to that, 5 3/4 to 1 reward to risk ratio. Alrighty, that concludes the swing within a trend aggressive trade example on the 4-hour time frame. Till next time, good trading, live well, and I'll see you soon. Hi, I'm Michael Nurok, and this is a swing trade sell example as an aggressive trade type on the 4-hour time frame. So these are the examples that we're looking at here. Of course, they're picked up by Trend Profiteer, so it's just always good to be able to identify them and be able to, confirm the trade based on your experience. So going over the rules, we have a bidirectional blue arrow in place for the overall trend direction. No more than 3 arrows are pointing down for the sell. I'm just going to place the marker right here of where these sell trade examples occur. I'll just place the horizontal line on that one first. I'll get rid of that one, and we'll come back to that one in a second. So just going over this example, of course, the arrow is displayed at the close of the candle that that created the signal. So in this case, bidirectional market in place, red, or trend follower is red. The yellow moving average is below the gray moving average. The price is equal to or below the yellow moving average. RSI is 50 or below. It's just a little bit above 50 in this case. And with the MACD, we have 2 consecutive green bars, at least 2 consecutive green bars is what we need. We have 2 in this case, followed by a red histogram bar that is below the zero line. Now, it doesn't need to be below the signal line as long as it's red and below the zero line. And that's all we need to look for in a swing trade. And for our stop, we'd put it just above the slow moving average. So I always like to place it a little above on sells and a little below on buys. So say 30 pips. And you can see here as a classic example of why you want to do that, because sometimes the market will do the unexpected. In this case, it spiked up and faked an upward move only to come back down. So let's just go back to here. 30 pips for our stop would have just survived that. And looking at our At our targets, we've got 30 pips here, giving us a 1-to-1 reward to risk ratio, 60 pips here, giving us a 2-to-1 reward to risk ratio, 90 pips here, giving us a 3-to-1 reward to risk ratio. Just make the 120 pips actually pretty comfortably for a 4-to-1 reward to risk ratio. Now we may have survived this, we may not have. If we did, then it went all the way down to just on 180 pips, giving us a 6-to-1 reward to risk ratio based on the 30 pips that we risked when we took this trade. Now, let's have a look at this example. And this one was a lot more cleaner. There's no spikes, and it dropped like a stone as soon as the signal was created. So let's have a look. Okay, so stop just above the slow moving average. It's only about 13 pips, but let's say we placed it, well, say 25 pips. Again, we like to give it a little bit of room. And in this case, much cleaner. So 25 pips would have been hit right here, straight away almost. 50 pips here, giving us a 2-to-1 reward to risk ratio. 75 pips here, 3-to-1. Yes, we made 4-to-1 reward to risk ratio, all on that nice little move. If we had survived it further, then we would have made probably about, let's see, 167 pips. So we easily made 150 pips, giving us a 6-to-1 reward to risk ratio on this swing trade, as well as this swing trade as well. So that concludes this example for a swing within a trend trade on an aggressive trade type on the 4-hour time frame. Till next time, good trading, live well, and I'll see you soon.